Topic 13. Preparing for the new venture launch. Early management decisions. At the end of this topic, students will be able to learn the importance of recruiting and motivating employees, understand the difference between the accrual and the cash methods of accounting, discuss the important issues in managing cash, expenses, assets, debt, profits, and taxes, understand how ratios can be used to assess the financial strengths and weaknesses of a new venture, illustrate control processes for marketing and sales plans, and understand how to effectively promote the new venture through publicity and advertising. When the new venture begins to reach a rapid growth phase, the entrepreneur needs to be sensitive to some of the resultant management problems. Rapid growth can quickly change the status of a new venture from profitable to bankruptcy if the entrepreneur is not sensitive to certain growth issues. It can cover up weak management, poor planning, or wasted resources. And it also dilutes effective leadership. It causes the venture to stray from its goals and objectives. It leads to communication barriers between departments and individuals. Training and employee development are also given little attention. It can also lead to stress and burnout. Delegation can be avoided, and control is maintained by only the founders. It creates bottlenecks in management decision making, and quality control is not maintained. In these instances where the entrepreneur does not have the expertise, it is recommended that outside experts will be hired. Trying to save money by performing these tasks alone would end up costing the entrepreneur more than the expert's fees. So what is the importance of recruiting and motivating employees, especially at this growth stage? To recruit the right person for the right job should be the motto applied, and recruitment can be initiated through advertising in local newspapers, trade journals, networks for friends, business associates, personal agencies, etc. The selection procedure can be fixed by criteria of evaluation based on education, experience, and interests. Rating of the candidates on a predetermined scale and then calling them for preliminary interviews, and questions can be prepared to apply during interviews. The entrepreneur, being a role model to these employees, can motivate them by good work ethics like organized, punctual, praise to employees, good communication, and incentives for good performance. All this will go a long way to achieve financial and emotional success of the entrepreneur, employees, and the organization. Now comes another aspect of growth control: accrual and cash accounting. In accrual method, the actual cash inflows and outflows are ignored. Sales may have been incurred but no payments received, or expenses have been incurred but no disbursements made. In cash flow method, sales and expenses are incurred when payments received or invoice paid. In this method, the entrepreneur has a tighter control over the cash position. Though either of the methods is acceptable, cash basis gives a better picture of the cash position to the entrepreneur. Managing cash, expenses, assets, debt, profits, and taxes. First of all, the cash flow. Since cash outflow may exceed cash inflow, the entrepreneur should try to have an up-to-date assessment of his cash position. This can be accomplished by preparing monthly cash flow statements and compare with the budgeted or the pro forma cash flow statements. Comparison of budgeted or expected cash flows with actual cash flows can provide the entrepreneur with an important assessment of potential immediate cash needs and also indicate possible problems in the management of assets or control of costs. Managing assets. In the assets section of the balance sheet are the items that need to be managed carefully by the entrepreneur, especially in the early months of the new venture. If credit cards are acceptable to the new venture, then the risk of accounts receivable collection will be shifted to the credit card companies, but with a cost of 3 to 4%. This has to be borne in mind. Inventory controls based on FIFO and LIFO methods can also be used in order to balance just enough inventories to meet demands for the finished goods. Too low inventory will lead to shortages. Excess inventory will result in increased costs. Fixed assets require long-term commitments and large investments. Hence, a decision to buy, lease or rent should be made. Depreciation, servicing and insurance are other related costs to be considered for investment in fixed assets. Long-term versus short-term debts. This decision depends on the requirements, availability, repayment cost and other related factors. Usually for investing in fixed assets, long-term debts are taken, and for working capital and other requirements, short-term debts are taken. Taxes. The entrepreneur will have to withhold federal and state taxes of the employees. The taxes like federal tax, state tax, social security, Medicare are withheld from the employee's salary and paid periodically into the appropriate agencies. Any default will be penalized with high interests and penalties. And the entrepreneur is also required to file end-of-term returns of the business. Ratio analysis. It is a method of calculating to find out a financial position of a business. The first ratio analysis that can be applied is the liquidity ratios. Under liquidity ratios, we have two common types, the current ratio and the acid test ratio. Current ratio is nothing but a ratio between the current assets and the current liabilities, and the most favorable current ratio would be 2:1, meaning to say the current assets should be 2 times the current liabilities. Then comes the acid test ratio, also known as a quick ratio. Here the numerator is the current assets minus the inventory divided by the current liabilities, and normally the favorable consideration here is 1:1. Activity ratio is another one, where the first and the most common is the average collection period. The formula for this would be the accounts receivable on the numerator and the denominator would be the average daily sales. Inventory turnover is another activity ratio, which means cost of goods sold divided by inventory. Leverage ratio. First leverage ratio would be the debt ratio, and it is the most common. That is the total liabilities divided by the total assets. You can also have another ratio under leverage, debt to equity ratio, where it is total liabilities divided by shareholders' equity. Profitability ratios can also be assessed. Net profit margin is a formula which applies with the numerator net profit divided by net sales, or you can also use the return on investment, where it is net profit divided by total assets. All these above ratios can be used to assess the financial strengths and weakness of a new venture. This can either individually used, or this can be used on a comparative scale with other firms or as an industry analysis. What is the control process for marketing and sales plans? These controls usually focus on key variables that reflect performance results established in the annual marketing plan. Some of them are the market share, the sales, the distribution, promotion, customer satisfaction. When these variables are controlled effectively at early stages, problems could be prevented or corrected before they become uncontrollable. So, the promotion of new ventures through creating awareness of the new venture, that is by publicity. Publicity is public interest, free advertising in any major media. The entrepreneur should prepare a new release and send it to as many possible media sources as he can, and they should follow this pattern. Begin the release with a service or a product to be marketed. List the features and benefits of the product or the service to the customer, and make the written news release about 100 to 150 words. It can include high quality glossy photograph of the product or of the service being performed. For the radio or TV, the entrepreneur should identify programs that may encourage local entrepreneurs to participate. Free publicity can also introduce the company and its services in a general format. How to select an advertising agency? An advertising agency can provide many promotional services to the entrepreneur, especially in the growth stage. Traditionally, the advertising agency has been perceived as an independent business organization composed of creative people and business people who can develop, prepare, and place advertising in media for its customers. Before selecting, consult with friends, local chambers of commerce, and other agencies. And the advertising agencies should support the marketing program and assist the entrepreneur in getting the product or service effectively launched. So this helps a new venture to move further in its development. That would be at the end of our topic 13. And we'll have to move on to topic 14, strategies for growth and managing the implications of growth. Thank you.